Welcome back, folks, to Investor Diaries. In this video, we will speak about the recent news accompanying the SPAC PSTH. So, Bill Ackman has a SPAC called PSTH, and today it was announced that they are withdrawing the 10% stake offer that they had announced on July 4th at Universal Music Group. Now, what's happened is that his hedge fund will now assume the share purchase agreement and buy 5 to 10% of the music label. Now, what's happened here? The complexity of the deal might have been too much for the shareholders of this particular SPAC, because from the time that the deal was announced on the 4th of June, the SPAC has fallen down in price by 18%. And that's actually massive, which goes on to show the sentiment of the people towards the particular deal.
That's right. So just to give a bit of a recap, the vehicle or the SPAC had planned to distribute UMG shares to its investors after a public listing of the music business in Amsterdam later this year. Investors would have had a right to acquire stake in this new entity. The deal would have effectively shrunk the size of today's current SPAC called RemainCo, and which would allow it to go after smaller targets. And Ackman had the benefit of not sticking to a 2-year timeline. There would not be a timeline associated with this new SPAC.
So, what really happened? As of now, very limited information is available, but PSTH has said that it has had multiple discussions with the US SEC in trying to address the regulator's concerns, and it didn't believe that PSTH would be able to consummate this particular transaction. Further, we know that the regulator was particularly worried that the deal structure would not qualify for the New York Stock Exchange rules, and actually it would be in direct conflict of the NYSE listing rules. The SEC raised what PSTH calls as the deal killer concerns last week, and that really killed the deal.
So what's Ackman's reaction to this? Bill Ackman said that the holders of the blank check company who are upset with the latest news should complain to the SEC. He said that he had anticipated shareholders' reaction to the deal and its potential impact on the investors who would not be able to buy or acquire the stock of UMG, which gets listed in Euronext, which is outside of NYSE. So there were some concerns around that. Investors were concerned about that because, as we discussed in our earlier video, not all brokerage houses support different stock exchanges.
So what happens right now? PSTH is going to look for a conventional SPAC deal. The SPAC now has 18 months to complete this deal, and it's going to complete a deal like a conventional SPAC, which means that it is going to take a company public. The only difference that PSTH has from the other SPACs is that it probably has more capital. So it has about $4 billion. So it can take a bigger company public than a conventional SPAC can.
On the bright side, though, the unraveling of this UMG deal allows it to deploy all of PSTH's resources to go after another merger, and there are a lot of viable candidates that are lining up, which could be some of which could be Plaid, Stripe, Porsche, or even Starlink. Additionally, they also have 18 months to complete a deal, so they have little time to find a valuable company to go after. So that is, in a nutshell, the latest news around PSTH and on its deal with UMG. It's official, it's off, and what happens next. We wanted to give a quick update to all our viewers to keep them updated about the latest. Please feel free to comment, or if you have any further questions about the deal, feel free to shoot us an email. We'll be happy to address that in our further videos. But until next time, stay tuned and stay focused.
Thanks so much.